It's all fun and games when the stock market has one down day, but two down days in a row? What world do we live in here where the stock market actually heads lower? It's crazy. No way that there's going to be a third down day. We're going to talk about that in today's Stock Market Brief. Got a lot to go over in today's episode. Clearly, as you can see, red across the board, except for the VIX. A little spike up there. We have defensive names up there leading the top: utilities, consumer staples, and healthcare. And the big laggards of the day is technology and energy. Let's get into today's show. What's up, everybody? Welcome back to the Stock Market Brief Show. My name is Michael Silva, and today's date is 11/10. CPI data came out today. It rose 6.2% in October from a year earlier. Its sharpest increase since 1990. The market actually took this as good news right out of the gate, but then continued to roll itself over. So a false reaction there at the gates. Is the market going to recover tomorrow? I wouldn't be surprised if tomorrow we wake up to all-time new highs. The market's crazy, all right? But look at what the dollar did. The dollar exploded to the upside here. It's been trending sideways. We talked, maybe it's potentially forming a little inverse head and shoulders. Kaboom! Dollar closed at 94.84 into a previous area of resistance, and also it tagged its yearly high. How do I know that it's at its yearly high? Well, this dashed line is where the year opened here in 2021, and you can see here, it's doing pretty good for the year so far as it's hitting its all-time high, this specifically for this year. And typically strong stocks, at least, and strong charts, they typically get stronger. We'll see here as it's spiking into an area of resistance. And if you just take a look at the left of the chart, it has been in this sideways range overall. Now, when the dollar goes up, that's typically bad for commodities, and it's also bad for the equity market too. S&P 500 had a down day, but nothing crazy right now, right? I mean, that was a big move in the dollar to see the S&P 500 fall to its 10-day moving average. Gold had a big up day, surprisingly. Start of the day, it went up as high as 1870 on the day. So, hey, maybe people are waking up to the fact that inflation is here and perhaps gold might be a good trade. Or maybe that was just a fake out and we get crushed down tomorrow. It's all a possibility, but let's call it for what it is. We broke out of this inverse head and shoulders. It saw a lot of strength, but then started getting faded into towards the end of the day. The PMO still crossed over. That's bullish. RSI's pointing up too as well. Had good volume on this breakout, but how did it get there? Well, it got there in a very strong move to the upside. So it's going to be interesting to see how this plays out. You can see the range of this candle is rather long, so I wouldn't be surprised to see some inside trading days here coming up. We've seen that plenty times in the past. And you might be wondering, well, how is it that gold is moving up with the dollar? Well, we talked about this in previous episodes, but there's plenty of times throughout history. This is the correlation between gold and the US dollar. And when it crosses above zero, you can see these times. That means that they are correlated. They're moving hand in hand. It's not meaning that they're both going up at the same time. It can mean that they're both going down at the same time or at the up at the same time. But when it is above zero, that means that they are correlated. And you can see throughout previous periods in time that we have had periods where the correlation does match up, but it never lasts all too long. You can see the majority of the time, there's typically an inverse correlation between the two assets. Now let's take a quick look at yields here. You can see the 30 up on the day, the 10 up on the day, the 5, just strong move in the 5, and then we have the 3-year down here. All the yields really shot up here as that CPI data came out. One thing to call out is the spread on the 30 and 5 continues to head south towards inversion. Still a while to go. What would that look like on this specific chart? Well, it's when the 30-year, this black line up here, inverts with the 5-year, so that means that the 5-year would have to get above this line. So it's still a distance away, but you can see that the yields have been compressing, and it's something that we're keeping a close eye on. Typically, when you get yields to spread or move very fast up like this, it puts pressure on tech, which we'll get into. Let's look at the 5-year yield, up 15% on the day. The bond market had huge moves today. at just huge moves, and it was surprising because financials actually really, didn't even move all too much. Very few actually had a decent day. But the 5-year broke out of this basing pattern. It's starting to head higher. We'll see if that continues. The 10-year here, I'm telling you, this inverse head and shoulders, and we had a big day today, up 7%. This starts breaking out to the upside. That can put just a heap of pressure in the equity markets moving forward. You take a look at the 30-year, the weekly candle here is tagged the 100 period, weekly moving average, and we're starting to see a little bit of strength here. And you can see the 30 is also forming a potential inverse head and shoulders as well. So if all of these start cranking up, yeah, it's going to put pressure on the equity markets. And why do I say the equity markets? Well, when rates rise and the rate at which they rise, it typically puts pressure on tech. And as you can see, the rates rose at a rapid rate today. And look at the heat map, right? This is the Nasdaq 100. Across the board, Microsoft, Nvidia, Google, Facebook, Apple, all down. And that put a lot of pressure on the overall market. However, there would have been more pressure if Tesla wasn't bright green today. So Tesla kind of held things a little bit together, but not by much. If you take a look at Microsoft is still greatly up on the year, and it's going to be one to watch because if this starts unwinding, I would imagine we'd still see continued pressure in the Nasdaq 100. Nvidia down on the day, but we don't really quite necessarily know if this squeeze is over yet. As it stands right now, this makes sense to see a big down day, right? Down 3.9, almost, let's just call it 4% after this really bearish type candle. We'll see here if we get some follow through to the downside. And you got to be very careful with this one because the market cap is huge, and where it stands year to date, it's still up, I believe, over 100% year to date, which is just been this monster move overall. Clear over 100% year to date. If you take a look at Google also caught a little bit of a bid right around the 20-day moving average, but down greatly on the day. We had a big gap down 2%, and we started continuing to sell off throughout the day as yields were rising. Apple, pretty darn bearish candle. You can see here, got below that 150 level, and we just flushed from open to close. Pretty darn bearish candle as the PPO is starting to cross over to bearish, and the RSI is getting below that 50 level. Amazon also big bearish outside trading candle here, down 2.63% on the day, 94.18 down. It's just big monster moves overall since all these yields have been just flying higher, and on top of all of that, mix that in with the dollar that broke out. Then you have FB. I should call it Facebook, but I can't call it Facebook anymore. It's Meta Platforms. Also had that big gap down on the day and continued weakness into around the 200-day moving average. We did close below that 20-day moving average. Somebody pointed out on Twitter, said, what's your thoughts on this? Is it potentially forming an inverse head and shoulder? Yep, could be. It's not quite there yet, but you can see a left shoulder head and a right shoulder potentially forming. Let's see here if it wants to start curling itself back up, and the neckline would be around 345 to 350, kind of that zone in there. So it's something to pay attention to potentially. Tesla up 4.34% on the day, gap down and turned to green. So that's actually a pretty positive sign overall. We'll see what this does in the days to come because this was a very forceful move with some volume to support the move after all that, poll that was taking place by Elon. You can call that's the reason why it dropped, but if you're really looking at the chart, it was bound to drop. This was definitely a squeeze to the upside, and weakness was going to come, and it was going to come at a rapid pace. So we'll see here if it wants to try to recover, but still it has a lot to repair from a fall like this and the volume to support that move. So we'll see what happens in the remainder of the week. If we take a look at oil also gapped up, very big bearish type looking candle, outside trading candle, suggests that there is potential more weakness to come. Where did it tag as far as the high goes? Just about $85, where there's previous resistance and weakness that followed. So we'll continue to see what takes place there when oil struggles like this, which we saw a very strong move to the upside, and then all of a sudden this big move to the downside on the reports of the CPI. So it's going to be interesting to see how this one plays out, as well as energy stocks. If you take a look at financials, which I mentioned earlier, they hardly moved, down 0.17% on the day. Typically, when you see yields rise, it typically helps the financial sector to a point. And you can see here, financials overall just didn't even budge. Semiconductors sector broke out severely. This is looking at Nvidia, which we discussed. We talked about AMD the other day, and this type of move it's going to get reversed at some point. It's going to be reversed, maybe not all the way to back test. It could, but a lot of the times when you see, like, look at this, a gap up and it just ramped straight up from 255 to 305. Okay, that's a very aggressive move. What we can see is a 50% retracement and then a potential move from that point, or you can just see it pull back and start to consolidate, chop around before it starts to continue to head higher. But as it stands right now, I mean, I wouldn't just be entering long specifically right here. I would want to see price action start to tighten up, start to consolidate, start to do something where I could actually create some sort of a trade plan. Now, this is the daily time frame. You can definitely create trade plans more intraday if you're looking at intraday charts. A couple reports, a couple earnings after hours today is Disney and Affirm Holdings. Those are the two big ones that are reporting, and you can see here just crazy earnings season overall. So once again, it goes to the point of you need to be very careful in this environment, right? So down almost 5% from close to, the reporting from basically peak to trough on the after-hour session. So Disney looks like it's going to be taking a little bit on the chin come tomorrow morning. We'll see what takes place. However, Affirm Holdings had a horrible day today, down 15%, and then it reports on earnings after hour, and it's up from trough to peak here, up almost 30%. So, just complete insanity going on in the overall markets, which brings us to the indices. Let's look at the S&P 500. Tag the upper trend line here, right at around 4,700. We're starting to see weakness. Where do we say we can pull back to? Well, potentially the 20-day moving average. The 20-day moving average, that right now is at 4587. Okay, so that it's going to uptick a little bit tomorrow, so it could be right around 4,600. If we see continued weakness, which could very well play out, we're going to start looking at this area right over here as a potential tag for support. So it broke out of that area, very strong move. Then we see a back test, potentially head higher. If you take a look at the 15-minute time frames, this little tiny wedge here, we did break down, started to see some more sell side activity right into around 462, and we saw a little bit of a move up right into close. It got oversold very quickly, right? So that bounce is likely. We closed below the 5-day moving average. This is the first time really in quite some time that we've had a strong close below the 5-day moving average. But keep in mind, we've seen this happen before back here, right? It closed and wiggled around, and then we gapped right through it and started its uptrend. So this could be a period of time where we head lower perhaps, or this is just a little blip. It's time to be careful. So if we start to move up, look at the 5-day moving average on the 15-minute time frame. That's 130-day moving average at 467.29 currently. That could very well act as resistance. Let's look at the Dow Jones. Dow Jones, pretty decent sized down day, down just over 0.5%, coming into around the 20-day moving average, which is right around 35,800. We'll see where that opens up tomorrow. And this previous area, 35,600, we're going to call it just to round up, could be the potential back test that we want to pay attention to. As far as the 15-minute time frame, looking at the DIA, we did close below the 5-day moving average. It is still inclining. You can see we got overbought and we rallied up a little bit as it stands right there. So there's going to be resistance perhaps right at around that 363 level, but if we start cracking down this 360, could potentially head lower to around that 358. Nasdaq 100, we talked about tagging this upper trend line. Now we're starting to see weakness. I'm not going to be too shocked to see this bounce tomorrow, as we had pretty much all the big mega cap stocks take a pretty big hit, and they could be getting oversold very quickly, and that presents itself as a potential bounce. Okay, where can if we keep continuing to head lower, where can we be? Well, 15,750 on the Nasdaq 100. That's the 20-day moving average, also right next to this previous area of resistance, and that could present itself as a potential bounce opportunity too if you're looking for a hedge long. The Qs on the 15-minute time frame, you can see pretty much just quick rally up after the CPI, after open with the CPI data, and then we just rolled over. I don't see the trade plan yet. I'd like to see this consolidate, form some sort of a pattern, and see it kind of coil up, do something. But as it stands right now, it's very, very hard to read. We got oversold and we saw that bounce. Russell 2000 broke out. Now we're starting to see some weakness. If it tags this 233, 234 area, or right around the 20-day moving average, which is at 231.52, this zone, that could act as a very good opportunity to potentially buy. Keep in mind, we always have the possibility of a bull trap right here, where bulls jump in, captures a lot of people, and then just completely takes us all out from the long perspective. I don't necessarily think that's going to happen. I'm not going to say it's impossible, but I would be willing to take shots long when we pull down and back test and just have a tight stop and then see where it goes from that point. Okay, you got to think like a year consolidation. It had resistance. This could act definitely as an area of support. Many people are going to be watching that. You can see here on the pullback, the volume has been significantly lower than the breakout move right here with the big green candles, big volume bars right here. So it's going to be interesting. It's going to be very interesting to see how it plays out. We'll see here very soon, probably this week, on what the market wants to do. If you take a look at the 15-minute time frame, we did break down through this bear flag, and we started to head lower, met that measured move right at around 236. We got oversold. We bounced, right? So there's not much that we can report on here as far as a trade idea, a trade plan, because I'm not seeing the setup right now. I need more time to pass. Unfortunately, it's Wednesday. Tomorrow, if you don't know this, tomorrow the bond market is closed. It is a holiday. And, it doesn't mean that the overall stock market's still open, but it's going to be a very interesting day. I still think volatility is going to be around, and that's not a directional bias, but volatility will still most likely be around come tomorrow. Let's look at some stock market indicators. We talked about the VIX on the 30-minute time frame being a double bottom. That started to continue to play out here. As you can see, we broke out, pulled down, boom, moved up. We still have a gap above us that needs to get filled. That's at 20.5 to around 21. But even above that, in the 40s, we have a gap. But it's not on this chart because I don't have it there. So it's still very possible, that the VIX shoots up higher. But I think coming into VIX Crush Friday, the bulls are going to do whatever they can to crush this back down. It's going to be interesting. Now, the BPNDX chart, the negative divergence is playing out. I would like to see this move down to oversold territory to find a hedge long on the Nasdaq 100. We'll see if it can get down there. It barely moved, right? But then yet the RSI came down pretty dramatically. So it could get oversold very quickly, and we can continue this bull run. It's just what I'm paying attention to. Same thing here with the BP SPX chart. Negative divergence is starting to play out here. I would like to see this thing come down and get oversold. Doesn't mean that it's going to anytime soon. It could take some time, but if we get a big hit to the downside or a big flush in the S&P 500 and Nasdaq 100, it could very well bring us to that oversold territory where I'd feel more comfortable starting to press a little bit long. As it stands right now, I'm not in too many positions, and most of my positions have been trimmed severely. So, even on a down day like today, where I haven't been taking any short positions, my account was barely down overall because I'm just more in cash at this specific time. The NIMOT, Nisey-McClellan oscillator, negative divergence is playing out currently. We'll see here if it continues to fall. You can see high to lower highs, high to higher highs. That says signals that we could potentially still see some more downside. Where can that potentially fall to? Well, we'll just pay attention to this big cluster of candles right here, 16,800 in the New York Stock Exchange. That's what we'll pay attention to. This is another one more short-term that I want to watch going into tomorrow and the next day is the trend, the 10-period moving average on the 60-minute time frame. When it comes down to the red zone, which it hasn't been here since mid-September, it could signal a potential more weakness ahead. And you can see these red lines. When it triggered, it was sold off. When it triggered here, it sold off. When it triggered here, it just went sideways and chopped around. When it triggered here, it actually sold off a little bit, but recovered, but then sold off a little bit more. Here, sold off, sold off, sold off, and sold off. And when it gets up into the green, we typically see rallies. So when this hit green, I notified everybody about that, and that was part of this inverse head and shoulders that I was tracking. And boom, we just saw that very, very strong move to the upside. So this is a pretty solid indicator. But like I said, this thing could turn around very quickly, and it can get bullish, and that would be a good thing for the bulls. But like I said, we got to pay attention to it. Cryptos. Now this is going a little bit too long, but this is the Sailor to Shift rotation tool here. And as you can see, the sell signal looks like it's about to get triggered. This is one that I've been watching. The rate of change is at 0.33 right now. When it goes negative, that is the sell signal. However, we need a weekly close. That's part of the strategy that I put together. You get a weekly close below that, and then you put the stop loss on that candle, that weekly, at the low of that weekly candle. And then if it's triggered, then your stop loss, you're tagged out, and then you wait for the next buy signal to occur. So as it stands right now, it looks like it's going to cross over, but there's been plenty of times where a sell signal was triggered and the low, the stop, area was not taken out and it continued to press higher. So I'm going to go into some more charts here soon to kind of get an idea as to where, if we do get a sell signal and we do get stopped out, where the price potentially may come to. So it's nothing to get overly worried and tripped out about. I know we've seen a lot of, crypto equities just get absolutely crushed today. And, that could be a sign of something. It could be potentially if this thing starts turning around, which, by the way, this indicator works very well. The buy signals work very well also for crypto equities. So, if just take a look at like BITF or MARA or HIVE or, RIOT, whatever you want. Like, there's so many different tickers, right? And you can just match this up with the buy signals and it works quite well. So, I wouldn't be surprised to see them continue to sell off or see some more pressure or consolidation if this crosses down through zero. Now, I pointed this out earlier. This was just crazy. So you can see here the chart, this weekly candle right here was up, more than where it's at right now. And, I posted this at 12:33 and I was talking about for shorter term traders, and the signal was not triggered yet. As you can see, it's still not triggered. And we could have potentially a fake out like we did here in January. We'll see if that is actually the case. But as soon as I posted that, what the heck took place? That was just a coincidence in the making right there. But we pointed out right here, this is a 2-minute chart, and literally from around 67,500 to a drop of 65,500. And these are just 2-minute candles. So that was, I don't know what the heck happened there. Pretty nuts. Bitcoin, the price of Bitcoin by itself on this specific chart, you can see this previous, not this candle, but the previous candle outside trading day, we had that big range of volatility on that negative divergence and the negative divergence on the PPO. So it's something to watch. But overall, if you just look at the price action, it's not like it's bearish, right? We broke out to all-time highs. We're pulling back here into a previous cluster of candles. We're above the key moving averages. Can it head lower? Can it take out these levels? Obviously, it could do that, but as it stands right now, we're seeing a little bit of volatility uptick. We'll see if it, turns into anything. So I want to zoom in on the 15-minute time frame, and I want to just point out the point of control here, looking at the volume shelf profile. So this is potentially forming a bear flag. We saw a big wick to the downside, and it caught right back up. Look at these are. It's an interesting potential level that if we start cracking down, I think that 61,402 can be a level to tag right at around also 60,170. So where we stand right now is right at around where we at 64,500. So if we do get that sell signal, I'd be starting to look at these levels right here to see another bounce if we get that continued weakness. If you're an intraday trader or if you're a long-term hodler, I guess it doesn't really matter. If you take a look at Ethereum, Ethereum's been in this very strong channel to the upside, which is a big outside trading day, very similar to Bitcoin. If we start breaking down through this, I say we go tag that 50-day moving average. It's more than possible. That lines up with this previous trend that broke. We never got that back test, right? And that's fine. We've seen that plenty of times. But you can see the PPO has been dying off here. If you zoom in onto the 15-minute time frame, this is actually more, it's actually came and tagged just about the point of control right here, and you can saw it found its support and started trading sideways. So if this starts to break, I would start looking at 43.09. Now from a 15-minute perspective here, you can, I'm sorry, this is all like chopped up. From the 15-minute perspective here, you can also see that the PMO indicator is starting to curl up here. So we'll see here what takes place. Sometimes when this crosses up, it is still below zero, but that can give us more movement to the upside. It's below its 5-day moving average. So if it gets back up to 4,760, you're not out of the woods yet on this potential move further if we do get that sell signal. So just something to be careful of. Let's wrap this up in the conclusion section. As stated, CPI data, it came out. We mapped out some key levels. We can see some very interesting things taking place, not only in yields, but in the dollar as well, and big tech. As it stands right now, you must be very, very careful. This is not an environment in which you want to just jump into. If the S&P 500, okay, the S&P 500, the options market, price this in, this move, and we pretty much tagged what the options market priced in on Friday of close last week. If we start closing, where are we at? We close at 46. If we start closing right around, I think it was 46.30, 46.35, that zone in there, and we start getting below that level and holding below that level, we could see some increased selling take place. So you just need to be very, very careful in this environment. Can we recover right away? Absolutely. But you know, it's very hard to trade. If you weren't in down here, it was hard to make moves. And if you're not short right up here, well, it's hard to make moves, right? We need to see periods of consolidation. We need to see something more than just straight up, straight down type price action, right? And we need to see some oversold areas and obviously overbought areas too, in order to know when to take profits. That's all I got for you on today's episode, everybody. Hope you have a wonderful night.